What is the capital gains tax? A capital gains tax is a tax on profits gained from the sale of an asset that was sold for more than it was purchased. The most common capital gains come from the sale of investments, stocks, bonds, precious metals, and property. But they can come from just about anything. For example, if you buy a used car for $3,000 and sell it for $5,000 a week later, you have a $2,000 capital gain. It's the same as if you bought stock for $3,000 and sold it for $5,000. Every taxpayer who makes a capital gain is subject to this tax. Why is the capital gains tax necessary? The tax is needed because it has grown to serve as a form of income tax for the extremely wealthy. As the capital gains tax rate has gone down, the usage of that form of annual tax rate over income tax has gone up. The income tax rate for most Americans is 35%. The capital gains tax rate has gone down to as low as 15%. How does the capital gains tax promote income inequality? As previously stated, if the wealthiest Americans are only paying 15% in annual taxes on their profits versus the 35% income tax rate of most Americans, the richest end up reaping huge benefits. Over the past 20 years, more than 80% of the capital gains income realized in the US has gone to just 5% of the population. 50% of that to just the wealthiest 0.1% of Americans. Basically, the rich just keep getting richer. Who is footing the tax bill? Also, while the wealthiest profit from capital gains and profit again from the lower tax rate, it means when they only pay 15 to 20% of taxes annually, they aren't paying their fair share. Instead of those who make the most paying the most in taxes, the middle class end up contributing more. Without the financial benefit of more in tax revenue from the wealthiest of Americans, that means less money the federal government has access to for programs to benefit those who have the least. It is one of the reasons why income inequality has skyrocketed in the US over the last 50 years. Out of over 100 nations, the US ranks in the top 50 of nations with high income inequality. Iran ranks better than the US. What is the solution? Raise the capital gains tax to 30% for married filers making over $250,000 and single filers making over $200,000 annually. The more equal the playing field, the better it will be for everyone.